So if you've been following me as of late, you'll see that I've been putting out several markups on non-cyclical stocks. So today I'm going to talk about Bunge Limited. I only recently heard of this company, so I'm not very familiar with what it does or anything like that. But shout out to John. I call him Ja, but he runs a service where he provides alerts for options traders. He's very good at what he does. So make sure you guys check him out. Um, I recently just dropped a new course with the guys over at By the Hood University. It's called God Charts and So Shall You. You can find that course and as well as past courses that we've done at chartsandpriceaction.com or godchartsandsoshallyou.com. And it goes deeper into price action as well as some trading psychology concepts that I've observed over the past several years that I've been learning about price action. So, without further ado, please like, share, and subscribe to my channel. Tell a friend to tell a friend, and I hope you get something of value out of this video. But let's go ahead and talk about BG. So before I really start talking about this, I must apologize because I haven't really been consistent in doing this. But one of the main things that I do when I mark up a chart is I make note of certain percent levels from the all-time high. So for this one, what I would mark is a 2%, 2.5%, 5%, 10%, 15, and then 20%. And those of you that are deep into technical analysis, you know that the 5% is the pullback level, 10% is correction, and then 20% is bear market territory. So the 2.5 and the 15% ones are just some other ones that I've noticed that are also of significance. So those are some of the main levels that I would mark on my chart as some key levels to watch. A great example is that SPX was struggling to break down below its 15% level or 15% pullback, minus 15% that is. And when it finally did, it really accelerated downward toward that 20% or minus 20% level, and it bounced from there. So just an example of, to illustrate, what I was talking about with those levels. So this one, BG, overall is, well, technically overall it's bullish, but if you look at the sentiment on the chart, it's really just trading sideways for the most part. So most of your price action over the past several years has been between about maybe 50 and maybe about 50 and I would say roughly 110, 111, somewhere in there. So that's where the majority of the price action has been on this time frame. And more recently, over the past 4 years or so, or 3.5 years, you see that the price has been on this nice bullish trajectory. And considering, what's been happening as far as the markets are concerned, big tech was running on its last little bit of gas. Um, COVID, late stage of the expansion phase of the economic cycle. So we know that those non-cyclicals tend to shine as the markets are cooling down or as the economy is cooling down, and possibly transitioning to a contraction in the market. So that's kind of what we're seeing right now, in my opinion. Um, but one of the, aside from the other levels that I mentioned, with the two and a half, the 5, the 10, the 15, and the 20. I would definitely mark the this 116 area, as this is where the prices pivoted years before. So back in '07, '08, and we know what happened then with the market crashing. Um, so back then, when the price got to that 116 level, it really started to struggle. Wicked up to 135, which is its all-time high, and only recently, over over a decade later, it just started to get back to that, to test those levels. So definitely a supply zone up, probably 115 plus on this stock. So um, for me, that'd be a significant level to watch, just moving forward. But for now, I'm just gonna um, just say, okay, so that's where the price pivoted, back then. So got a name for that one. Of course, throughout the year, of course, I would want to watch for that 2021 closing price, which is around 93 and change. So it also happens to coincide with this area about 2014 and 2015, the highs at that point. In 2021 closed above that level, so that's a great thing for anyone bullish on this stock at that point in time. But I'm just gonna and name this one 2021 close per usual. All right. So those are in addition to those other levels, and I'm not drawing those levels right now because I want to keep my chart clean. So just just know that I'm noting that those levels are acknowledged at least. Okay, so again, we got this little trend on this yearly chart here. And we'll be watching the price or monitoring the price throughout the rest of the year to see if it can get above 116 and hold that area. So what I'll do is I'll just put an alert right at that level in a note. All right. So price entering a historic supply zone at that level, and it typically sells off there. So again, I'm gonna be watching it. You see, the last time that it closed there for the year, that next year was just really, really bearish, and you can see that it has a pattern on the yearly chart whereby it'll hit a key level, it'll close at a key level at the end of one year, and that very next year it'll be bearish. So just something to just a quick little pattern that I noticed here on the yearly chart. But let's move ahead to the monthly chart. Monthly chart, you can see this thing has been on a tear since May of 2020. So since shortly after COVID, this thing was down under 40 bucks, and I mean now it's over 100. So I mean, if talk about timing, you know what I'm saying? That great entry there at the bottom, for anyone that was able to get in at that point. I mean, even if you just waited until this breakout here above 55, that would have been a great entry as well. But what I'm mainly seeing here on this monthly chart is a like a little channel going on, and y'all know I love channels. So we have an ascending channel on this one. Gonna change my colors to blue because this is a monthly chart. So I like to be able to distinguish between the different levels. no matter what time frame I'm looking at. So, okay, so we got our blue. All right, and so notice that for the last, really for the last 3 months, I'll say that the price has been touching or testing the upper level of that that resistance on this monthly chart. And what typically happens is once it does that, it'll sell off down to this lower trend line. So just kind of keep an eye out to see if the same pattern holds where this thing sells off for the next few months. Nice beautiful shooting star here right at a key level on the monthly chart, and so far the month of May has been just kind of indecisive but bearish leaning. And so really I'll be paying attention to this one over the next couple of weeks to see how things shape out for the month. But really possible that we may get, confirmation of a sort of not necessarily a bearish reversal, but maybe just a little pullback, or that maybe sentiment is changing and this thing may start to kind of just trade sideways for a little while. I mean, because think about it, over the past 2 years, this thing has just been booking it. And so at some point, that buying has got to fizzle out because, stocks can't sustain these types of moves for very long periods of time. So even though, a stock like this likely outperforms in this sort of market, they still have their moments where they just kind of consolidate or pull back and things like that. So this is really where I would be applying the whole 2.5 minus 5, et cetera, and not necessarily on a macro level where you're doing it from the all-time high, but maybe just a recent high. So you can use those levels as potential buy targets as well. So maybe this thing pulls back 2.5 to 5% from this area before it continues on. I'm not saying that that's my hypothesis. I'm just saying that that's a possibility. And I'm gonna just draw where if this thing consolidates where I think it will consolidate. And I think that that consolidation would probably be between about 120 and maybe 105, maybe even down to 100. But that's what I'm a mark for now, and just kind of monitor it. I have my upside level plotted, so we'll just see how it goes. But moving on to the weekly chart and see what's happening, what's developing there. You can see on the weekly chart for sure where it's already started to range. Entered that range here in February, late February, and it topped out at 128. So not quite hitting that all-time high of 135. And then it started to pull back and it came back inside of this range. And so that's where it's been for the past several weeks. This is really kind of an outlier, but I stand pretty convicted that the price is kind of concentrating between about 105 and 120 on a long-term basis. But you can also see where the price on the weekly chart has pretty much respected those monthly levels, and that's why I stress the importance of doing a top-down analysis and marking those historical levels um, uh, more so than your lower levels. Even if you're a day trader, it doesn't really matter. But a nice cup and handle breakout here. And let me see, this thing is probably topped out at this point. Probably about I would say maybe a 20-point move there. So yeah, this thing is pretty topped out. But this 112 to 115 area is an area that I would watch for sure, because that's pretty much where that pattern exhausted itself, in my opinion. So yeah, just see what it does inside this range. If it comes down to this 105, see if it holds. Maybe there's some opportunity to the upside on a short swing. toward 110, 115, maybe even 120. Um, gonna check out the daily chart right quick. Do a quick little note about the implied volatility to see kind of where it is right now. And I also want to see where it's trading in relation to the 50 and the 200-day moving average. The 20 is important too. You know, a lot of people use the 20. I also use the 20. Um, but just understand that the 20 period moving average is your mean reversion level. So when the price pops up, if I won't just say pops up, but when the price has spikes in either direction, eventually they come back to that mean value, which is that 20 period moving average. So just, you know, something to keep in mind. And you can see the price is below that 50-day moving average right now. And so maybe it's trying to retest that 50-day and just see if it, you know, can successfully pass that, or if it just confirms that it's going to break down and maybe head down to 105, maybe even lower than that. And if that 105 gives way, then I'd look for 100 or this monthly trend line, which happens to line up currently almost with that 200-day moving average. So providing more conviction to the strength of this level. Um, but yeah, I'm gonna set an alert right here at this 50-day moving average, and I want to know if it's above it. So, all right, okay. So let's do a quick um, note about implied volatility. Um, and I'm just going to expand this up a little bit so I can see it better. I'm on my 1 year daily chart for sure. And all I want to do, the main thing that I want to do, I shouldn't say all, is notate pretty much the range on the implied volatility. And if you didn't catch my video that I did with Diamond Dave this past Friday, we did a live where we talked about the broader market and sentiment, and you know, just basically gave our opinions on the current state of the markets. I talked about the importance of implied volatility and how I do my implied volatility studies, in ways in which you can save time by using implied volatility to get the best pricing for your options position. So as you can see, for the most part, this one likes to trade between about 26 and 41%, so not quite a 20-point spread on support and resistance for the implied volatility. And so you can see with this one, when that implied volatility drops down to about 26% or lower, it has a nice bounce where it runs up toward 41 for the most part. And then, you know, really at that point, you can, I won't say you can because this is not investment advice, but I would consider selling my positions once the implied volatility got that high. Because remember, and David mentioned this in that live that we did this past Friday. Make sure you go check out Diamond Dave and subscribe if you haven't already. Um, when implied volatility is high, selling premium is the optimal or the ideal strategy, because we know that the higher the implied volatility, the higher the premiums for those contracts. And so if you're getting in at the high, you don't have a lot of profit potential to the upside. But however, if you're on the side where you're selling premium, you're getting I won't say the highest possible price, but based on historical data, you're getting a good high price, and you're selling uh, premium to someone who's hoping that the price will go higher. You know, so which side do you want to be on based on that implied volatility? And that's something that every options trader should think about, regardless of the time horizon on their position. So I don't want to draw this out too much longer, but again, thank you for watching. I appreciate you guys. Um, I'm getting close to 500 subscribers, and that was my goal for the year. And it looks like I'm gonna have to expand that goal, make that goal much bigger. And I could not do it without you guys. The support of y'all, your engagement, your viewership. I'm so grateful. But anyway, make sure you check out the next episode of my non-cyclical series. But this has been uh, episode, I want to say 4 on BG, Bunge Limited. So I'll catch you in the next video.